Good morning, everyone, and welcome to the Daily Hunt for Multibaggers. I'm Ethan.
And I'm Brooke. It's Thursday, December 25th, 2025, and we're looking at the data we pulled yesterday, December 24th. We've certainly had some interesting activity overnight.
That's right, Brooke. Our hot lead scans picked up a fair number of discussions, with some stocks showing significant spikes in activity. We saw quite a few different companies flagged, and the overall sentiment, well, it's a real mixed bag today. We're seeing a strong current of optimism, but our deep dive into the KPIs is definitely flagging some serious risks that can't be ignored.
Let's jump right into it then, starting with Reddit, ticker RDDT. This one has seen a lot of buzz lately, with an increase in related posts compared to earlier in the week.
Absolutely, Brooke, and for good reason. User sentiment is overwhelmingly bullish on RDDT. I saw discussions highlighting its strong year-to-date performance, up 36%. Many users, are saying this is just getting started, and some financial news is even calling it a top 2026 pick. There's a lot of talk about solid ARPU growth, which is a fundamental positive for a social media platform like Reddit. The current price is well above its 52-week low, showing real momentum.
Momentum, yes, but let's pump the brakes a little, Ethan. While the sentiment is high, my KPI-driven analysis raises some significant red flags. The price-to-earnings ratio for RDDT is an exceptionally high 104.08. It's implying investors are already pricing in years of aggressive future growth.
But with 67.9% revenue growth, isn't that growth potential, a strong counterpoint?
It is strong, yes, but for a PE this high, the company needs to not just sustain that growth, but potentially exceed it year after year just to grow into its current valuation. And here's another critical point. Insider trades over the last 6 months show a net selling of over 335,000 shares. Insiders usually have the clearest picture, and their selling often contradicts public optimism, suggesting they might view the stock as fully valued.
That's a fair point on the insider activity. But the news is so positive. RDDT rides on solid ARPU growth. Reddit stock is ready to run again. It really paints a picture of a company with substantial upside.
It does, but those headlines are about future potential, Ethan. We've seen RDDT mentioned before on the podcast, generally rated as stay away or speculative gamble, due to these underlying valuation concerns. While the community optimism is high and the news is positive, the current valuation and insider selling are substantial risks.
So, given the previous ratings and the strong growth narrative, where do we land?
For RDDT, despite the exciting headlines and user optimism, the foundational KPIs, especially that PE and the insider selling, are too significant to ignore. My AI-generated analysis points to us stay away for now, though it's clearly captivating for highly speculative investors.
All right, stay away it is for RDDT. Let's move on to Ondas Holdings, ticker ONDS. This is another one that caught our eye.
ONDS appeared on our radar again after a bit of a quiet period, with 12 related posts yesterday.
And the one significant post we saw had the original poster claiming ONDS as one of their best plays or big ones, holding a profitable position. The stock's historical performance has been pretty impressive, going from around $2.5 to over $9 this year, validating that user's positive experience. Plus, recent news is talking about growth drivers like Counter UAS, a new COO, and Needham even raising their growth forecast. It seems like the company is really trying to expand with M&A and new contracts.
That's all great for future potential, Ethan, but the current financial picture for ONDS is frankly concerning. The company is unprofitable, with a negative net profit margin of negative 1.72% and negative earnings per share. That's a major red flag for any sustainable long-term investment.
But if the new contracts and M&A start paying off, couldn't that flip the profitability?
It could, but it's a big if. We also have to contend with a very high debt-to-equity ratio of 3.701, indicating substantial financial leverage and heightened risk. And let's not forget the beta, which is an exceptionally high 2.361. This means ONDS is incredibly sensitive to market movements, amplifying both gains and, more critically, losses. Even Jim Cramer has expressed caution with, "I'm going to have to take a pass."
So, high volatility, high debt, and currently unprofitable. What's the AI's take?
Our system has consistently rated ONDS as a stay away in the past, and despite the positive news about potential catalysts, the fundamental weaknesses remain. The risk is simply too high, so for ONDS, it's a definite stay away.
Well, that was a truly insightful deep dive, Brooke. It's clear that even with some positive headlines, the underlying numbers demand caution.
Absolutely, Ethan. It's about balancing potential with tangible risk.
So to recap for our listeners, here are today's candidates. Investigate as buy? None. Investigate as cautious buy? None. Investigate as speculative gamble? Reddit Inc., RDVT. That brings us to the end of today's Daily Hunt. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us.
We'll catch you next time on the Daily Hunt for Multibaggers.